This is Milto here. Happy Easter to everyone. Hope you guys had a very relaxing and good holiday. Stuffed your faces as I did. And we've got a pretty busy week ahead, so I'm going to start going through this. I've done pretty thorough analysis on what we've got coming up with regards to event-driven risks and how they're going to pan out in the market. So let's take a look at that. Obviously, the main thing coming into this week was the non-farm payrolls that came out on Friday. Um, Bearing in mind that most markets were actually closed on Friday, we had some moves, especially in the dollar space and the equities. So we had a lot of dollar weakness and equity weakness as well, which was interesting on the non-farm payrolls and jobs numbers out of the U.S., which came in at 126,000 versus 250K expected. Now that number is worse, but we have to bear in mind that that is not as important as wages, and they could pin this to weather concerns. Again, they could use that excuse. So that's just it's going to be interesting to see how the Fed's members reacts this week, and any sort of speakers that are coming out, which we'll take a look at shortly, how they might react to this jobs number and how it's going to affect their monetary policy going forward. The unemployment rate came in at 5.5%, as expected. However, the U.S. average hourly earnings actually ticked up to 0.3% increase. So that was slightly more than expected. The expected number was 0.2%. Now that was a better number, and it was also a number that's very important in the Fed's leading indicators for inflation. So they're looking at this average hourly earnings to see whether we get any sort of wage inflation, which ultimately is going to be what leads to wage inflation. That is what's going to trickle down in the real economy. So that's quite interesting for me as an intraday trader as well, because tomorrow on Tuesday when I come in and trade the European markets and the U.S. markets as well, it's going to be interesting to see how the currencies react, how the equities react to this kind of data, because there is a bit of a discrepancy. I mean, we had some equity weakness off of the figure, which it's kind of like, okay, well, usually we get the bad news as good news because we might get a more dovish Fed, but on the contrary, the S&P actually came off very, very sharply. But then the dollar also came off very, very sharply. So we saw like the euro dollar rallying quite a bit to the upside. It doesn't quite fit in with the picture because you get this usually, or at least recently, when we've been having dollar weakness, we've been seeing a bit of equity strength. A stronger dollar has actually been dampening growth projections. But anyway, we're not going to go through that whole rigmarole now. Let's actually go through some of the event-driven risks and see how that might play out. We've got a lot to talk about, and I'll try and wrap this up pretty quickly. So Tuesday, we've got the European PMIs. Those are final readings. We also have the European PPIs year on year. So watch out for those two figures, see how the market reacts to those. But particularly, we have the Reserve Bank of Australia coming out. Now, the last time we saw a cut was in February, and for this meeting we have the market pricing in around a 75% probability, last time I checked, of a 25 basis point cut from 2.25% to 2%, which is going to be a record low. Now, a cut is somewhat widely expected, but it's balanced between April and May. Now, if you take a look at the recent iron ore prices, they've actually plunged quite significantly. And that has probably put a bit of sense of urgency for a cut in April. I think that's why we've been getting slightly more aggressive, market expectations for a cut on this meeting. Now, if we take a look real quick, also note just before I move on, we've got the Fed's Kosh Lakota speaking. He's a non-voter and a dove, but very strong dove at that. So if he does actually say anything that's quite hawkish, then we could see some good market moves. But let's move back to the RBA. So the RBA, we've got a very high expectation for a cut. Now, there's two markets that I really want to point out for this risk event. Obviously, there's the Aussie dollar against the US dollar, which, as of right now, if you take a look at the structure, it's been quite weak. And if if you're looking at also the euro dollar, which is quite a popular market, in comparison to the Aussie dollar. You've seen, I mean, this structure was very, very similar after the FOMC. We had that break to the upside as we did in the euro dollar as well, but the Aussie dollar has actually come off quite significantly. That's, we've had that um, relief rally in here, and then the shorts came in strong and started selling this market off. It's also made a new swing low just below these 0.755 level. What's interesting is actually the market coming into this week on a daily structure has actually left a bit of a swing rebound, so it couldn't actually find any sellers below here. So the structure of the market still feels, well, it actually does feel as of recently, slightly in the short term bullish, slightly. And I say only slightly. Obviously, longer term, medium term, it's still very much bearish. You have to bear in mind, though, in the short term, though, we have found a bid in the market. I would like to point out last time we had the cut in February, this is the market's reaction that we had. We had about a 180 pip move to the downside in the Aussie dollar, and that basically got retraced back up, and we closed basically around where we opened. So bear that in mind. I have a feeling the way I'd be playing this is if you want to be a buyer of Aussie dollars, maybe look at the Aussie dollar versus the US dollar. Because we've got the bit of the structure here. Last time we actually didn't have a structure. We had a pretty nice three-bar triangle. So this day was within the previous 2-day range. So you would think, given that structure, it would continue. Now, given that we've got a very high chance of this cut happening, if we do get the cut, I would be looking possibly if we get a quick shank to the downside and we possibly get back above these levels in here, then we can get a pretty swift, a quick rally to the upside as all those shorts get caught. I'd say that's a better, market to be trading. I think if you want to be a buyer, and also obviously if we don't get the cut, this is probably the market you want to be trading straight off the bat. It looks like it could have a pretty quick move to the upside. On the contrary, if you want to be a seller of the Aussie dollar, I would probably be looking more at the euro against the Aussie dollar, the cross. Now, why would I be looking at this? Because if you take a look on the daily structure as it stands right now, going back all the way to December 2014, we've had this pretty significant trend line resistance right in here, which has been holding all the way through February. And then March, we tested it towards the end of March, or actually the beginning of April, we actually tested it, and we've broken that to the upside. So this is basically implying euro strength versus Aussie dollar weakness. So as it stands, this market's looking quite strong. Now, if you want to be, a seller of Aussie dollars and you feel like there could be some further downside in that pair, okay, if you want to choose that view, then I think this is probably the currency pair that you want to be expressing that trade idea in, because it feels as if this market's stronger, which implies weakness for the Aussie dollar. And if we get above these levels, like these 144.16s in here, which seems like a very significant swing high and low, then maybe the bulls can start taking control, and this could run up all the way up to these at least maybe 146.07. So I think there is scope in this market to move. And bearing in mind that recent euro strength that we've had, this kind of fits in well with the picture. So watch how the dynamics play out. Regardless of the scenario, if there's a cut or not. I'm just showing you two different markets. I'm not going to give you all my scenarios and how I'm going to trade them, my trade ideas and what stops and what targets I'm going to use. But I'm just saying, okay, if you want to be long the Aussie dollar, okay, maybe you want to trade the Aussie dollar versus the US dollar. On the contrary, you could play it, from the short side, the Aussie dollar, and play this cross pair, which looks like it gives you a bit more bang for buck. Cool. Great, let's move on to some of the markets that we're going to be trading, and more pertinent to the jobs numbers and how the markets are going to react opening up, the European markets especially. If you take a look actually at Reg did a very nice little analysis. Richard Bailey from the office, the London office, he did a pretty nice little analysis on the last time we saw a jobs number coming into this weekend, the Easter weekend. I think it was in 2012, if I'm not mistaken. And actually, the analysis that Reg did, we actually had a lower than expected number, very much in the range that we got this time around. And it's going to be interesting to see how the markets react to this, because I would be expecting gaps. So notwithstanding, if you look at the Euro Stoxx 50, we've seen the S&P, which I'll show you guys in a bit, has actually sold off quite aggressively to the downside, and that's actually looking quite bearish at the minute structurally. Um, and the Euro Stoxx, every time we're getting these gaps to the downside, we're seeing buyers, bidders step in and buy it up aggressively. That was very much seen on the first day of the month, which was on Wednesday of last week. We saw the market open up with a gap in here after some U.S. equity future weakness, and the market came in and just bid the market really, really aggressively up. Obviously, it was the first day of the month, first day of the quarter, so there was a lot of buying action, and I did go through my weekly market wrap. How some friends of mine that work in investment banks, they were seeing some incredible amount of buying from hedge funds. The hedge funds were just buying in the future space aggressively, and it wasn't just um, it was any sort of buying. It was panic buying. It was literally, I don't care what stock it is, just buy me anything with liquidity type of buying. So bear that in mind coming into tomorrow, if you're trading tomorrow and Tuesday, because we could get a very similar reaction. I wouldn't expect as much buying because it's not the first day of the month. Uh, so that's something to keep note of. But if you take a look at the technical range, we've got these 3602s from 3602s up to about 3672. It seems like within this area, we're auctioning very swiftly, is the word I could use. Because, I mean, every time we get some sort of auctioning back into that range, we auction to the other side of that range very, very quickly. So I'm going to be paying attention how we trade if we open up lower, how we trade around these 3602s again. And just below that, we've got some weekly value area lows, which I'll show you in just a second. But bear in mind, again, we've got this very, well, I'd say medium-term trend line support, which has been acting as a good little pivot, which comes in, very nicely at the inside day low from Thursday of last week at 36.36, which also conveniently, when I show you the value areas on a weekly, is also the weekly value area low from last week. So bear in mind when we come into this area how the market's going to be reacting just in here. And also you want to bear in mind these 36.56, which is the inside day high as well. So if we do get back above in here, I think that we'd have probably a swift 20 tick reaction to the upside. So just keep this structure in mind. We're moving on now to the weekly market profile of the Euro Stoxx, which like we just went through, you can see the weekly value area lows from 2 and 3 weeks ago at 35.94 and 35.97 respectively. So if we start opening around these regions, I'd be very, very keen to see how the market reacts from the buy side around here. So if we do see some strong bidders and we get back into this area, back into this range of last week, 36.02, like I pointed out, we could see some swift buying to the upside. But mind you, again, it's not going to be, I wouldn't think it's going to be as strong as we saw on the first day of the month. And also bear in mind, if we do get to these 36.35s pretty quickly, which is the weekly value of last week, also the inside day low, I think it's 36.36, I'm going to be keen to see if there's any sellers here. Because if there is sellers here, that's going to make the US session for me very, very interesting. Because if we find sellers here and we can't get back into this weekly value area and we start auctioning lower to find new value to the downside, that's going to make the US very interesting for me. On the contrary, if we get back inside here, I would expect an auction up to these 36.63, which is the last week's weekly value area high. That's just auction theory. You've seen the largest bulk of TPOs as well. I think it's very much, it seems very much a good anchor for value for last week. So definitely bear those areas in mind in the Euro Stoxx. Moving over very quickly to the Bund futures. And I'm highlighting a structure that I love. This is a cup and handle structure that I love to trade. It's at the highs, obviously, so that is that is what matters. It has to be at the top of an uptrend, or an inverse cup and handle be at the bottom of a downtrend. So it is at the top. We do have a double top at the minute. Um, what I didn't quite like, and I went through on my weekly market wrap, is that we actually took out this previous swing low. So we're rounding this pattern off. So you're making the cup in here. This is your cup. You double top, and then effectively you would like to see a handle just form above these 58.93s in here, or at least above these swing highs in here. Because if you would dissect this cup and handle formation, it's really three sections, as I've pointed out here. You've got the base in here between 58.62s and 58.10s, or whereabouts. This area, this box base, is the base of the cup. The body is just in here from 62 to 93, and the top bit, the lips of the cup as I call them, from 93 to 13. The lip is where you would like to see the handle form. And we didn't actually get any handle forming. Actually, coming into the latter part of the EU session, actually saw a pretty decent sell-off. And what I didn't like is the fact that we took out the swing low, because essentially you want to see this cup rounding off, making higher swing lows, and then effectively you get that big burst of volume through those highs. Now, what's interesting is obviously after the jobs numbers, we've seen a very rapid move up in the US 10-year T-notes. So what I would be expecting this market to gap quite a bit higher from where it is right now. Which, if we do gap above these highs in here, I would expect on the open there'd probably be some, at least in the first few seconds, there'd probably be some big buyers in the market, just because if you take a look at this from a pure technical analysis standpoint, this is a double top, and there probably would have been some shorts initiated in here, or at least in here. So there has been, in my opinion, there has been some shorts initiated. So I would expect opening above here, we'd probably get a swift blip, maybe at least 2 or 3 ticks, maybe a lot more than that. I mean, it could be 10, 20 ticks, but I think you could get some swift, few ticks on the open. I would expect the market to auction lower though after that. So if we come into these areas, I'm going to be very keen to see how the market reacts around these highs, these 159.13s, and these 159 double O's as well. And I'll show you now on the weekly market profile why I'm looking at that area. So on the weekly market profiles, I always look, if you've been watching my streams, I always look at the weekly value areas. That is so important for me and a lot of the traders at the firm as well. So and I'm assuming we do gap quite a bit higher from the daily range of the previous day, it'd be interesting to see how we react. First of all, at these highs, at 21s and 13s, obviously, because we've got these selling tails in here. But most of all, these 159 double O's, which is the weekly value area high of last week. Also, a pretty nice little round number for you guys to trade. Just below that, I mean, essentially, I wouldn't like to see a close below these 159 double O's. But just below that, we also, mind you, have these 158.95s, and around those areas, 95s, 93s, we've seen some nice little swings there. So I would be keen to, between these areas, to see how the buyers react in here. And if we do see some buying action and we leave some tails in here, maybe a few tails or some wicks on the hourly, I would be looking to see if we build some actual value, because at the minute we've got a bit of a selling tail. So if we build some value, that value effectively is going to be your handle. If you do get some value building in here, and especially if we get negative delta throughout most of the morning, because if we do, for example, gap higher, trade lower aggressively to auction lower back into this range, so there's going to be aggressive sellers, so we're going to have negative delta. So if we do have negative delta in this value, and then at some point, once that that selling has been absorbed enough, this is a big if, obviously. There's a lot of ifs in this pattern, so it's not a given. If that negative delta flips to positive through these areas, we could see a very swift move to the upside. Now, these are obviously a lot of ifs, a lot of if-then scenarios, but bear them in mind. Again, another if is if we do start closing below these 159s, I'd expect a very quick move down. It's going to catch a lot of these longs that are playing for that, that move back up. It's going to catch them out, and also, that just basically shows as a failure to, sustain a bit above these areas. So I'd expect that market to probably push lower quite swiftly. Bear in mind we've got the weekly 50% and the close around the 76 to 78 area, so just in here, and then the weekly value area low at 158.52, just in here, which is just before we see this cave of time value build. So that's quite interesting to note, and interesting to see if we see any sort of buying in this area. So that's pretty much my analysis on the Bund coming into the week. Obviously, further into the week, it's gonna, you'll see how it plays out, and you can change your plans accordingly. But that's kind of the way I'll be looking at it come tomorrow. Looking at the S&P, like I noted before, if we do see any sort of equity weakness in the European session tomorrow, which I think it's a low probability, but if we do, usually when Europe is weak, as of recently, the S&P is a lot weaker, because we've seen days where, the European markets are quite strong and the S&P is still weak. So I think if Europe is weak, S&P is going to be weaker. And I think the key areas to point out, obviously I think a lot of people have already been looking at these 2045s and 2044s just within that area in here. So we've come and touched that, I think, on the day today. We've touched that. We've been just licking that area time and time again to see if we can find any sort of sellers. But the important level for me is these 33.25s. It doesn't take a genius to see that that is an important level. You can see, double, 2 times we came down to this level, couldn't quite get below it, and it just seems as if below here we're probably going to auction quite quickly down to at least, I mean, in my view, I think it'd be a quick, swift move to the downside. If we do start closing and holding an offer below there, I think these 1982s are probably a decent target, which is a fair way away. So we're looking at, just shy of 50 handles. So bear that in mind. We have some important levels to watch at the S&P this week. On the contrary, if we can't actually hold any offer below there, this is an inside week from last week. So, I mean, I would expect some decent moves. But if, on the contrary, if we can't hold those moves, then we could probably auction quite quickly back up to the other side of this weekly range. Okay, so bear that in mind for the S&P. I think these are at least a few of these key levels to be looking at coming into the week. Moving on to Wednesday, we've got the European retail sales and the crude oil inventories as always. But we also have the BOJ's interest rate decision and press conference early on in the morning. Now the interest rate decision, that comes out whenever the BOJ wants. It's a bit of kind of divas, these Japanese central bankers, but so be it. It's usually out between 2:30 and 3:30 a.m. I think if they have more to talk about, or there's more discussion around interest rate policy or any sort of policy, then it's probably going to move later and later. But the presser is at 6:30 a.m., so watch out for that. There's no actual action expected, but definitely keep an eye out on some of the markets. Like there's 2 markets really I want to point out. One being the euro against the yen. Now, if you're looking, I think, to play for any sort of explosive moves, I mean, it seems to me this market's coiled quite nicely. And again, this plays in with the whole euro being quite strong as of recently. So if you want to play a short on the yen, this seems like the market that's, more prone. I mean, even though we have had this, this move to the downside, this feels like this. I mean, this market does feel like it's lagging a little bit with regards to the euro being a little bit stronger as of late. So if we do get that reaction, maybe a pop through these areas. We've got a 3-bar triangle, so this day within the previous 2 and 3 day range. There could be some good volatility through these highs. On the contrary, again, really this could also go the other way. Just just bearing in mind that we've had this weakness. Just the main point that I want to point out here is not that this looks any stronger or weaker. The fact is that we've got a nice consolidation and build of energy, so that could give us some good opportunities trade-wise. Again, the dollar yen, as it stands right now, it seems like it's forming a bit of a flag on a weekly time frame or even a monthly time frame. We're just below that very, very big monthly resistance, which we came close to, and we found some sellers. Again, this is also holding a nice 3-bar formation coming into the week. The main points to be looking at, the break points, 118.69 and 120.36, the highs and the lows of last week. Just bear those little levels in mind coming into the week. But really, we're range bound between these 115.56s and these 122.02. So just bear this range in mind. It doesn't seem like it's going to be as explosive, but again, bear that in mind. We got the Fed's Dudley speaking, but I think the most important event with regards to the Fed is the FOMC meeting minutes from March. Now, the things to be looking at, I think, are if there's any more clarity on the preconditions for a rate hike. So, for example, how much more improvement in the labor market is needed, and what are these indicators? So, if they can give us any more clarity, any more transparency, which the Fed's Yellen has been super opaque on their policies. So it would be nice to see if we get any sort of clarity on what it is they're going to be looking at, what's going to be driving their decision, and then what conditions will make most voters reasonably confident, because they keep saying they want to be reasonably confident that the inflation outlook is going to be quite perky in the near future for them to hike rates. So what are those conditions? If they can give us any sort of color on that in the minutes, possibly we could get some decent moves. Now, another thing that I'd probably be looking at is any discussions of how further U.S. dollar strength might affect FOMC's view on achieving both sides of their dual mandate. Obviously, recently we've had a bit of dollar weakness, which they're going to be a little bit relieved about. But back then, before the FOMC, we actually that dollar was still quite strong. So they're probably still going to have a few comments on the dollar if there were going to be any. So just bear that in mind. Just the market to be looking out for. The market I'm looking at is the euro dollar, just because it seems as if we're slowly drifting, higher and higher. We noted that we're getting this bit of euro strength versus dollar weakness. We made this after this recent swing low at 104.63. We've spiked up after the FOMC. That FOMC high at 110.11. We haven't managed to close above that, which is key for me. Because we keep leaving these wicks. Every time we try and get above that spike high, we're not really getting that close. So I think if we do start closing above here, we could probably challenge this 111.02, which is a very key swing low. Above here, and I think the buyers start taking a bit of control. And if you note this bit of a pennant formation that we're forming, if we do start breaking that to the upside, we could see, I think, a few euro dollar shorts getting squeezed, and this getting maybe a little bit hyped up to the upside. Again, another little area to be noting is these 112.77s, which was a little swing low range in this area right here, between here and the 115.03s. On the contrary, if we do actually hold an offer, I'd probably see this likely to test the other side of this pennant formation, probably down in these areas in here. Looking over at crude oil just to see how it's panning out. We've seen a bit of volatility, obviously, with all the Saudi conflicts in Yemen. We held that key area at 47.80. We didn't exactly, to the tick, but we didn't hold it to the tick, but we did hold that value area. So we're back inside this range of value area. But we're also, as it stands today, we're breaking out of this inside day, or basically a double inside day from last week. And we've broken that. We've found some strength in this. So if we can actually hold and sustain that strength above these 50.45s, which I think are quite key, and I think we could start auctioning technically up to these 52.48s. On the contrary, if we do start closing below that and holding an offer just below those areas, this should auction back down to these areas. But effectively, as it stands, because we're holding above this area, technically we should be testing these 52.48s. Above these 52.48s, I think it's going to get quite uncomfortable for the shorts. If you see every time we get up to a swing high, they're flat swing highs. So we have a flat swing high at 54.24s. We have a flat swing high at 52.48s. So there's going to be, layers of stops. A layer of stops here, a layer of stops here. So I'd pay very close attention if you're trading this market if we get into these areas. Some nice little setups ahead, I think, in the crude oil market. Moving on to Thursday and Friday, not much on the data front. But just going through it quickly, U.S. initial jobless claims on Thursday, as always. Then we've got the BOE's interest rate decision. Nothing really expected on Thursday, so I'm not really going to show you guys any charting structures. And I think by the time we get to Thursday and Friday, probably a lot of the charting structures will have changed anyway. And then Friday, we've got the UK industrial manufacturing productions. And from a central bank policy perspective, Fed's Kosh Lakota, which seems like he talks every Friday. I've just noticed this every week. He seems to love to talk on Friday. But mind you, again, he's a non-voter and a dove, so any hawkish comments out of this guy probably going to move the market quite aggressively. So, from a risk and money management perspective, obviously not trading on Monday, so I'm not putting anything in there. Tuesday, we've got three. The relevance of them are quite high, so you could see a lot of volatility in their respective markets. I'm allocating 30% risk allocation. I probably would even put a little bit more just because we've got all these gap opens and opening out of balance plays that are probably going to happen in the European session. But also we've got quite a bit of data and event-driven risks on Wednesday. So 5, and they're also quite high relevance. So I've kind of split that evenly, 30-30, Tuesday, Wednesday. Thursday, 2 event-driven risks, Friday also, and the relevance are also, they're both low relevance. But traditionally, the market tends to do most of its volume on Thursday. So I always put a little bit more risk and money management just to Thursday, just in case we see a little bit of extra flows. Also, because we don't have a lot of data on Thursday, the markets, if they are moving, they trade a lot better technically, because there's no data that can affect it, so you can trust the technicals a little bit more. And again, Friday we just close up the week with 15% risk allocation. So that's my trade. Risk and money management plan, and also a pretty thorough event-driven risk trade plan for the week and roadmap of how you can steer around these event-driven risks and how you can trade them. There's lots of opportunities, lots of money on the table, I think, coming forward. So good luck for the rest of the week, and I hope it's a profitable and lucrative one. We'll speak again on Friday. We'll be doing my weekly market wrap. Thanks a lot for listening, guys. Bye-bye.